So all of that money printing since the onset of the global financial crisis did nothing to slow declining GDP growth, but it put a heck of a spark in the stock market. And of course, people watched and they learned. Realizing they never really get rich just putting cash in the bank, folks started to make big moves, which have just about zeroed out their real savings rates. They've taken all of that money out, but they put it into the stock market. In fact, in the past year, we've seen more money come into the market, equity market, than the combined 19 years ahead of that. But now experts say individual investors are taking on too much risk as they are using call options and leverage bets. All of that's soaring. It's the greatest game in town, of course, until it isn't, and everybody wants a piece of the action in the meantime. So let's bring in Genevieve Rock-Decter along with Michelle Snyder. Genevieve, let me start with you. When it comes to the market, it's interesting because you're something of I think you're a maverick, right? You're sort of traditional when it comes to investing in equities. And with that in mind, the newbies who are out there, should they be more cautious at this point in the rally?
Yeah, Charles, I'd love to quote one of my favorite finance mentors, Peter Lynch, who said, the key to making money in stocks, and I would modernize his quote and add crypto, is not be scared out of them. So the problem with being all in on these, high-risk options, YOLO, meme, crypto, whatever, is that you're getting whipsawed around like we've seen in the last few weeks, and you won't have the emotional wherewithal to stay in. And so the key here is to protect yourself from yourself and build a portfolio, and this is where my sort of old school thinking comes in, and use the 80-20 rule. Do all that, high-risk stuff with 20% of your capital, because if you blow yourself up on it, it's not going to blow up your whole pool.
Right.
But if you do well on it, it could actually meaningfully change your financial future if something goes up 5, 10, 20x.
Right. All right. Great point. Michelle, you trade the high flyers. You've got your own technique you've developed. I think it's part technical. Have you been getting more aggressive during these down days?
Not really, no, because we took a lot of profits before we had the volatility come in, lost a couple last week because of the volatility. And so I'm at this point really stalking. I think I see the internals more as neutral. The risk is sort of neutral at this point. And I've got the areas that I'm really hopeful for 2022. So I rather kind of coast here. I added a couple of things in the last couple of weeks, but we're light on the equity side. We're still very focused on commodities.
Really? Okay. I mean, I find that to be intriguing. Today, I'm sure some of those names you're stalking today are up like 30 points, 40 points. And to your point, though, I've got a few names that are up like $35, $25, and I'm still down in them. Let me ask you about Tesla, because this morning it fetched a new target, $1,000 from UBS. Previously, they were at $725. This on software as a systems chip, it's just an area that I happen to love. And a lot of these stocks are doing well. Mungo just had a monster earnings beat. Are you buying anything in that space or stalking anything in that space, Michelle?
Well, yes. I mean, what's interesting is Musk came out and said that they are no longer getting federal tax credits, while the infrastructure package actually will offer tax credits to individuals who buy EV companies that are unionized. So that could actually put some of the spotlight back on Ford and General Motors. And Tesla's right here in no man's land. I liked it when it dipped down around 940. I didn't buy it because I thought it might go down further. But between 1,000 and 1,100 right here, kind of mixed. I would be a little bit patient to wait for either another dip or for it to clear, believe it or not, 1,100.
So in that 20% bucket, Genevieve, any room for Tesla, any room for Apple, which also saw its highest new target this morning at $200?
Well, Apple's in my 80% bucket, sleep at night stock, but Tesla, I can't wrap my head around the valuation. They produce 1% of the world's car, yet the market cap is larger than the 9 largest car companies combined. It's almost bigger than the entire S&P Energy Index. We did put out a report this morning. I've got a former Goldman Sachs quant analyst now working with Grit, and he said, between Tesla and NVIDIA, it's over 4% of the S&P 500 index, right? You get this crazy situation where you have all these passive index buyers that have to keep buying Tesla. Mm-hmm. And as the price of Tesla keeps going up, I know it's taking a pullback here, but as it goes up, you get all these options traders coming in and buying options on it, which then causes the market makers to have to go and buy stock to be hedged out. And then you get the people who are short Tesla who are now offside having to buy it. And so you could get this situation where, Tesla and the S&P start to look like a bit of a meme stock. So I'm not saying that's going to happen, but there's a really weird setup here.
Real quick, there's a piece in FT on Bitcoin this weekend, that this whole route that we saw this weekend. was because Wall Street traders are having more sway. GRD, I want to ask you about that. You know, you like crypto. Is this good that it trades as a correlated asset? Before, one of the selling points was, hey, when everything else is going to hell in a handbasket, chill out, sit back, because Bitcoin is going to be fine.
Yeah, look, we had some hedge funds with some paper hands over the weekend, probably locking in some profits. I think the more liquidity, the more different types of owners you have of Bitcoin, whether it's pension funds, institutions, the better. And this has been proven out. If you look back at the last 7 corrections on Bitcoin, if you count the 2018 correction, it used to be that Bitcoin would lose like 99% of its value. And now these corrections are more in the 30, 50% range, right? So volatility is coming down. Exactly.
You know, listen, I love when people who've never played crypto at all talk about some of these swoons, right? They're like, how can people deal with that? I'm like, did you see the other one? Genevieve, Michelle, I wish we had more time. You are two of my favorite, but we took a lot of notes. We'll talk to you both again real soon. Meanwhile, folks, New York City.